Hello there traders, my name is Elizaveta Belugina and I'm the head of analytical department at MPS. I'm very glad to be here today at this webinar and we'll discuss the Forex market outlook for this week, for what is left of this week. We'll discuss the major currencies, maybe we'll touch gold. And as usually, we'll cover fundamental and technical topics in order to develop the best trade ideas. Let me switch on the presentation. Here it is, our usual agenda. We start our talk with the market's positioning, then we move to economic calendar, technical analysis, and finally, our destination is the trade ideas. And let's study the update of CFTC data. These are commitments of traders from Commodity Futures Trading Commission. And this data allows us to track the dynamics of actions of large currency speculators. Actually, you can see that there is a time lag in this data, and this is what we get for the week which ended on Tuesday, March 21st. But still, it is the latest data available. The next figures will be on Friday, March 31st. And we'll have a look at them, but next week. And let's discuss what conclusions can we make from these visuals. Firstly, we can see that the aggregate US dollar position keeps slowly increasing, and it may look surprising as actually we saw a big sell-off in the US currency last week, and in the previous week US dollar was weaker as well. However, we can see that if we take positions of large speculators, they are still holding US dollar and are buying US dollar more than they are selling this currency. And this is something to think about. This tells us that there should be some support for the US currency fundamentally, and speaking of how the market is positioned. But apart from the US dollar, we have some interesting developments in other currencies as well. Have a look at the euro. For example, we can see that the bearish euro bias is decreasing, and this decrease which happened during this week we are talking about is very sizable, and actually short positions on the euro, net euro shorts, are at their smallest level in more than a year. And this tells us that the market players have priced in some of the future reduction in the European Central Bank's monetary stimulus. I think that this decrease in the euro shorts reflects this idea. And also a sizable change from the previous week of observation is that the market's net position on Canadian dollar switched from net bullish position to the net bearish position. We can see a significant weekly change which was against buying Canadian dollar, and now this position is in the negative territory. Such decline in such change in positions for Canadian dollar in favor of the bears is probably connected with what we see at the oil market, where the oil prices also took a blow. And as US dollar has gained some positions, Canadian dollar has lost some ground, and this is what distinguishes Canadian dollar from other commodity currencies like Australian dollar and New Zealand dollar. For Australian and New Zealand dollar, the picture looks a bit better than for Canadian one. And as Canadian currency is more dependent on oil, well, here the conclusion may be that oil is the main driver of this situation for Canadian currency. So if you look at other currencies, other assets, there were no interesting and sizable changes which are worth mentioning. Still, we can make the basic conclusion that such currencies as British pound, Japanese yen, and Swiss franc now retain sizable net short positions, and Canadian dollar joined these currencies, while gold and Australian dollar enjoy sizable net long positions. This is what we can say on the basis of this CFTC data. Let's move to the US dollar index. I love looking at this index because this way we can understand the dynamics of the US currency. And if we look at many different currency pairs separately, we sometimes don't see the overall picture, the big picture, and what is more important, we don't get the technical signals we can get from the price chart. The US dollar index solves this problem. This is the dynamics of the US currency versus the currencies of America's main trading partners. And firstly, I propose you to have a look at the weekly chart. There were 3 weeks in a row of declines in the US dollar index after it failed to strengthen above 102 point resistance at the beginning of March. And now after this decline has took the US dollar index to the levels in the area of 99. We are now testing levels below 38.2% Fibonacci retracement of May-December advance of the US dollar, and if the US currency stays below this level located at 99.24, then according to the weekly chart we can see that the next Fibonacci level of the 50% retracement is located at 97.83, and closely there in the area of 98 points for the US dollar index, we can see the 50-week moving average. This is the support level. Although looking at the weekly chart of the US currency, we can see that this dynamics, this chart pattern resembles a double top. We can see that at the beginning of March and the end of February, the US dollar index formed a high, and this is a lower high. Now the asset is trading around the neckline in the area of 99.24. So the inability of the prices to get above this line and settle there will mean that we'll see further decrease, further round of weakness in the American currency. We can see that this week opened with a gap for the US dollar index, and we may see American currency trying to close this gap to test higher levels around 99.50. Next important resistance is located at 100 level and 101 surely. Let's have a closer look at what is happening at the daily chart of the US dollar index. And here we can see that a bit lower around 98.50. There is 200-day moving average, which is leaning to the upside and providing support for the American currency. The US dollar index is also facing a short-term resistance line in the area of 99.25, and the big hurdle, the next big hurdle, is located in the area of 101. So this is the technical picture for the US dollar. We can see that there are some support levels, but if the bears increase the pressure on this support, there is still the stand for the US dollar to extend its weakness and to extend its downside. What are the economic news, the highlights of this week? We'll have speeches of various FOMC members. We'll have important data from the United States, like CB consumer confidence today, like pending home sales on Wednesday, final GDP for the fourth quarter on Thursday, together with unemployment claims. And on Friday will be an important day as well. We'll get the release of American core PCE price index. I advise you to pay the most attention this week to this release of core PCE price index in the United States, because it's actually the main measure of inflation used by the Federal Reserve. So it will affect the further policy of the American Central Bank. So traders will surely track this piece of data. So this is what we can say about the US economic agenda. Also, there will be news from other currencies, other countries. I haven't included it here, but on Wednesday we'll get a big event in the United Kingdom, as Theresa May will finally trigger Article 50 and start the formal procedure of Brexit. A long talk since June of the past year, and now finally this process begins. No one actually knows where Brexit will take the UK and what will be the real impact on the economy of Britain and of the European Union, as this is the first time a nation leaves such a union. So it is really represent uncharted waters, something unknown for traders, something unknown for everybody. And we'll get some figures from the euro area, like inflation data from Germany on Thursday, and for the whole region of the euro area on Friday. This is it, what we have this week. We don't have many meetings of the central banks, etc., but still some events are there, as actually no week on Forex market comes without important events. But it will be easier and more fruitful to discuss these events looking at the charts and analyzing the currencies. Firstly, a couple of words about the US currency, as we have already started the technical picture for the US dollar, the fundamental picture for American currency. We can see that the US dollar is nearly at the levels which were last seen in November of 2016. So US dollar has returned to the point where it was at the US presidential elections, and analysts and traders are discussing the fact that maybe US dollars trade on Donald Trump policies is over. There's a reason why such discussion is taking place. Donald Trump last week had a first test of his ability to collaborate with the Congress. And it happened that he failed to repeal Affordable Care Act and failed to pass his health care bill through the Congress, and that's why Obamacare remained in place. And we saw that Trump didn't manage to successfully negotiate with his fellow Republicans. This created concerns that Trump is not able to deliver his pre-election promises, that he's not able to push through the long-awaited tax reform and infrastructure spending, and this reduced inflation expectations in the US and hurt the US dollar. Of course, it's not clear now what the further actions of Donald Trump will be, but I don't think that this one failure will prevent him from actions like tax reform and infrastructure spending. But still, for now, in the short term, this did hurt the US dollar sentiment, and probably the bears will still be able to test lower levels. Just remember that there is support around 98.50 for the US dollar index, and above this level, some people who want to buy back the US dollar may emerge. Below this level, below 99.20, the currency will remain under pressure. We saw that large speculators are still slowly increasing their US dollar long positions, and there is the reason for that. Despite this disappointment with Donald Trump, we should still remember that this month the US Federal Reserve actually raised interest rates, which is very different from what other central banks in other developed nations do, and this is another fundamental factor which is supporting the US dollar. So the dynamics of the American currency will probably be different in different currency pairs, and we'll now discuss whether these other currencies are strong and have their own resources as well. So we are starting with euro dollar, and as usually with the weekly chart, to have a look at the currency's dynamics. There were two main bullish drivers of the single currency during the past week. The first driver was that political concerns in Europe have declined a bit. The centrist candidate Emmanuel Macron performed well during the first French presidential debates last week, and he's now ahead of his main counterpart Marine Le Pen from the far-right National Front in most opinion polls. And as Macron is the pro-European candidate, this is surely good for the euro, and the currency is starting to appreciate and price in a better outcome of French elections. So earlier traders saw great risks. They thought that French presidential election may turn out to be another event like Brexit or the US presidential elections, which brought unpredictable results. But now things are starting to calm down, and a more conservative, a more establishment approach is winning. So we can see that euro longs are increasing and short positions are decreasing. Also, The euro area released surprisingly strong manufacturing and services PMIs. Business activity across the region is rising at the fastest pace in almost 6 years. The European Central Bank is still doing its quantitative easing, though the monthly amount will decline starting from April. Good data will intensify the calls for the ECB to tighten its monetary policy. And in the coming days, we'll be paying attention to German CPI on Thursday and the Euro area CPI on Friday. Higher figures will be another bullish factor for the euro. Looking at the weekly chart, we can see that our first target at 109.10 has almost been hit by the pair, and that there is some possibility for the single currency to strengthen more, to test the 50-day moving average at 109.50. Personally, I think that the best moving averages to watch are 200-day moving average, which is painted in orange here, the 50-period moving average painted in brown here, and also the 100-day moving average, 100-week moving average in this case. We usually paint it in green. Is also a good tool. These are the moving averages which are mostly watched by traders and investors. So I think that they are important. And this line is just above the key psychological level of 1.10. So earlier in my previous reports, I pointed out that as long as we stay below 108 mark, 108.30, this was January high, the euro may reverse to the downside. However, now I feel that the fundamental picture is improving. We have strength from the euro area, we have weakness on the part of the US dollar, and I think that these levels at 109.50 and even 1.10 in case of some negative surprises from the US are attainable. For now, I don't think that we need to target higher levels than 1.10. It will be running ahead of the events, but further upside is still possible for the euro. If we look at the daily chart, we will see that the former resistance, which was located at 108.30 and 108, is now acting as support, as well as 107.70 area. So here we may draw several support lines. We may take Fibonacci from these recent ones. Still, support levels I think are clear, and if we want to take deeper supports, it will be in the area of 107. For now, we can see that on the daily chart, on Monday, the single currency failed to close above 200-day moving average, which is currently located at 108.79. This is a sign that above this line in the area of 109, there are some short positions on euro. I think that some orders are clustered here around 109. So for bullish bets on the euro, we need to confirmation that this line, 200-day moving average, is actually broken to the upside. In the near term, the euro looks a bit overbought, so we'll be looking for a test of support of 108.30 and 108 in the coming sessions. Also, I usually use this weekly pivot indicator. Every week we have to renew these levels the indicator gives us, and it's a good way to judge where the market is situated at the moment. You can see that the light blue line is located at 107.80. This is the weekly pivot point, and as long as euro dollar is trading above this line, the picture is more favorable, is more bullish, and we can see that the pair is already above the first resistance line, tested the second resistance line, and the third resistance line is located just at 109.47. So the levels we have found on the weekly chart correspond with the weekly pivot levels, and 109.47, 109.50 is a good way where it is possible to take profit on the euro dollar long positions. I point out at the fact, however, that we have this gap which isn't closed yet, and attempt to close it may bring euro dollar down to support at 107.80. We'll get some comments from FOMC members in the coming days and today as well. So these comments from the US Central Bank may act as the short-term driver for the currency pair. And if these comments are hawkish, that may provoke some strengthening of the US currency and be a trigger for the euro dollar to close this gap, get into lower levels. Still, as I point out, the break of the euro dollar above February and January highs is a good sign, and it's a sign that the euro is capable of getting higher. If we look at the 4-hour chart, we can see that here still bullish trend exists. This may be seen by the relative places of the moving averages. Another currency pair to discuss is British pound, US dollar currency pair. And as I have already mentioned, this week, finally, a Brexit, formal Brexit, will be triggered. All in all, we can see that in the recent days, the UK currency managed to significantly strengthen versus the US dollar. Partly it was because of the general weakness of the American currency, and partly it was because of the upbeat economic releases coming from the UK. For example, CPI figures pushed up through the Bank of England's 2% target, and UK monthly retail sales posted a stronger than expected growth of 1.4% and broke a weakening trend, which was present in the past 2 months. So if we want to make some conclusion on Brexit, we can say that the lengthy negotiations over Britain's departure from the European Union will finally start officially. And as most of the negative news and the Brexit uncertainty is already pretty much reflected in the pair, in the price and in the exchange rate of the British pound, we don't expect massive drops from this currency. So there may be some downward reaction in the US dollar, in the British pound, I'm sorry, but don't expect the move of the same force which was seen on the Brexit referendum. This is very unlikely. We can see it on the, let's have a look on the weekly chart, that on the weekly chart we are moving sideways. On the daily chart, we can see that the British pound is approaching resistance of the falling 200-day moving average, located at 1.2690. Here it is. Before that, the currency has ability to strengthen as it is above the weekly pivot point located at 1.2446. We are now currently at the first weekly resistance level in the area of 1.2560, and second and third weekly resistances are located at 1.2643 and 1.2756. So the first level to support GBP USD on the downside will be at 1.2446 and then 1.2360. All in all, yesterday's candle has a sizable upper wick, so some attempt of the British pound to get lower is actually quite possible. However, we can see that on the 4-hour chart, despite the reason for correction to the downside, this reason is represented by the divergence between the price and MACD indicator. This is the reason for GBP USD to test lower levels, but there are support levels in form of the moving averages. Here you can see these lines at 1.2450, 1.2380, and 1.2325. So we'll be looking for this area to provide support for the British pound, as once again we should mention that Brexit is already pretty much priced in here, at least in the short term. No new things should emerge this week. I think that the best support, the key level of the levels we have mentioned, is the level at 1.2350. This is not only a pivot level, but also a visual support, an area which constantly supported the prices in the previous times. So focus on these levels, and here the British pound may once again find buyers and find demand, and may try to retest high levels once again. Dollar yen. Here the situation is different, is interesting, and it looks rather beautiful. We can see that this daily Ishmael cloud put weight on dollar yen and prevented it from rising above 115 mark this month, and then the price is reversed to the downside. Also, we have the negative intersection of the moving averages. The 50-day moving average went below 100-day moving average, and the pair slipped below the Fibonacci level at 111.50. So next target lies at 109.33, and we have this daily moving average at 108.20. This is the picture on the daily chart. We can see that the basic conclusion is that dollar yen has left its previous range of several weeks, range between 111.50 and 115, and now it looks more vulnerable to the downside, to the levels between 109 and 108. If we try to analyze fundamental picture for the US dollar Japanese yen, it may look a bit complicated. The pair was driven down by the general weakness of the US currency. In addition, Japanese yen has managed to strengthen on a scandal involving a land deal, and and the wife of Japanese Prime Minister Shinzo Abe. This scandal harmed Prime Minister's reputation, and it is an interesting phenomenon that the yen is used as a safe haven and is strengthening versus the US dollar, even when the risks come from Japan itself. Also, I'd like to point out that this week is the last week of Japanese fiscal year. So Japanese companies and investors are continuing to repatriate their profit, which was gained abroad. So they are buying Japanese yen, and this is a contributing factor to the appreciation of Japanese currency and the weakness of dollar yen. This is what we can say on the part of yen's strength. At the same time, we know that the US dollar keeps being supported by the widening US-Japanese interest rate spreads. The Bank of Japan Governor Kuroda gave some dovish comments. He pointed out that Japanese economic recovery still lacks momentum, and that inflation remains far from its 2% target. It means that Japanese central bank is not planning to withdraw its massive stimulus anytime soon. And this is a very different policy stance compared to the Fed's rate hikes. This is why, to understand the policy of the Bank of Japan, to understand the real necessity to continue this extremely accommodative monetary policy, extremely big monetary stimulus, traders will be watching Japanese inflation figures, which will be due on Friday, March 31st. According to a poll by Reuters, core consumer prices have risen in February at the fastest pace in nearly 2 years. And actually, despite these commands from the Bank of Japan, many analysts think that the regulator's next move would be to reduce monetary policy stimulus. And this may actually happen, according to the many analysts, as early as in the next half of this year. This is pretty soon. This is not priced in by the market yet. And despite the fact that the Bank of Japan tried to talk down such possibility, still high inflation will encourage the yen. The yen is currently strengthening on the expectations, and despite the general monetary policy divergence between the Fed and the Bank of Japan, in the short term, the US dollar Japanese yen currency pair obviously has space to weaken to the downside. We see bearish signs, and below the psychological support of 100.25, 100 mark, the 200 week moving average and psychological support. The next support will be around 109.13 and then 108.20 mark. If we are talking about resistance, then surely 111.50 will be the main hurdle for the pair before the levels of 112.50 and 113.40 will come inside. So the conclusion here is that our outlook for the US dollar Japanese yen currency pair is pretty much negative. We can have a quick look at other currency pairs like Australian dollar, US dollar, and here we saw an expected rejection from the levels above 0.77, despite the weakness of the US dollar versus the euro, the pound, and the yen. The US dollar feels much better versus commodity currencies. There are some concerns related to Trump's trade policy measures, which affect these currencies and declining commodity prices. I don't think that we'll get a significant decline in the Australian dollar. We can remember that the speculators are still in net long positions. Well, some scope for weakness to the level of 0.7550. This is 200-day moving average. Surely exists. The level of 0.77 will remain significant resistance for the pair. US dollar is a bit less strong versus the New Zealand dollar. The Reserve Bank of New Zealand kept interest rates and its monetary policy unchanged last week, and didn't provide a boost for domestic currency. We can see on the daily chart that there are pretty many moving averages which act as resistance, and as long as the pair is trading below 0.71 level, then will likely test lower levels around 0.6970. So as long as this trend line remains and the 100-day moving average is intact, then we can't confirm that it is a swing to the upside in this pair. And we can see that there is more or less sideways dynamics in the US dollar, Canadian dollar, and here Canadian dollar is affected by the decline in oil prices, but the US dollar is affected by the disappointment with Donald Trump policies. So this is why we don't have a rapid strengthening of the US currency, and we have this sideways dynamics around 1.3350. And having a look at gold. Gold has reached our target at 12.60. Here is the 200-day moving average, and I think that it is too dangerous now to establish new long positions. Only a confirmation of a clear break above this level will allow us to open new longs on gold. Remember that the US Federal Reserve did increase interest rates, and this surely declines the attractiveness of gold as a safe haven and as an asset as a way of investment. The bullish trend remains, but the asset may test a bit lower levels before it makes another attempts to get higher. I point your attention to the fact that here at 12.60 we have also a hurdle in the form of 50-week moving average. This confluence of moving averages for gold makes this resistance level stronger, and surely means that gold may fail here and test the mentioned support level. So this is what I wanted to share with you today. Let's make a quick conclusion about the currency pairs and assets we have discussed today. Firstly, the US dollar affected by Donald Trump's policy, and to be more precise, the lack of this policy, the inability of Trump to pull through the healthcare legislation through the Congress. So below 99.25, the US dollar will remain under pressure. Support is located at 98.50 for the US dollar index, ahead of the 98 mark. Euro is feeling rather well, though we expect a short-term correction down to 108 mark and probably to 107.80. After a correction, the single currency may try to test higher levels to return to get higher to 109.50, as the positive factors for the euro include the decline in political risks as well as the strong underlying euro area's economic data. GBP USD will have a test this week in form of the start of the actual Brexit process, but we don't expect an extreme reaction. Some downside is possible, but we will find support at 1.2450 and more strong support at 1.2360. Resistance for the currency is located at the level of 1.2690, where we find the descending 200-day moving average. Dollar yen will likely test lower levels after we focus at 109.30 and 108.20, while the pair is trading below resistance at 111.50. Commodity currencies are declining versus the US dollar. We don't expect significant declines, but gains are problematic as well. Gold has reached resistance, and for now we think that it's time to fix profit on the gold longs and await some fresh drivers and fresh momentum for this asset. This is all for today. I thank you for your attention, and I hope that my message was helpful for you in your trade. I remind you that it was Elizaveta Belugina from FBS, and I'll be very happy to deliver another Forex webinar to you next week. Have a good trade, have good luck, and see you next time.